Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts.
All right, here's we have a guy here inside of DTI that's an actual currency expert, and he does a lot of research for us, and he believes that if they leave the rates unchanged on December 4th, that will be a non-event. If they raise the rates, it will increase the euro, obviously. If they lower the rates, it will decrease the euro. And I think you probably, based on what I'm reading and what I'm seeing, you're probably going to get at least a decrease in rates, because business has not been stimulated at this point. And I can't imagine for me in the life of things that somebody would be crazy enough to raise rates in this economy. It'd sort of be like raising taxes. You sure wouldn't want to do that either. So right now you want to do everything possible to stimulate business. All right, ECB to FOMC, that's from December 4th, December 16th. December 16th is the last vote of the Federal Reserve this year, and I call it vote because we will get an indication at that time on whether or not the Fed is willing to do anything or not do anything as we go into the turn of the year. I know that trading so far, if you can look back to 4 or 5 days ago, you've seen a rally that's been up to new highs every day, and that new high, new low thing has been working for about 3 days, and we hadn't had that in over a month of Sundays, it seems like, but that's what's happening right now. So if they do as expected on December 4th, lower rates, obviously the concern will be about inflation. What would the possible effect be? You'll see the euro decline. Now, if the Fed comes in and lowers rates, 0.75% or 2.75%, you're looking at a Fed that's basically interested in the fact that they don't want to step in thing. So and I agree with that last statement. Economic outlook right now is driving everything. They've thrown inflation out the window right now. All they're worried about is keeping the lifeblood moving. And here's two major differences. The ECB is concerned about inflation, but they have had their eyes open with the economy. Clearly, the FOMC is not even concerned about inflation anymore. They're just, it's like, who can we bail out next? That's sort of the way Washington's working right now. Everybody's got their hand out, and they're basically saying, hey, don't I count? And you sure don't want to lose me. It seems to be asked, and you got to ask for an order to get it, and they've been asking up there in Washington D.C. over the past 30 days. All right, if the euro is expected to rise, clearly that's not what we think. We think the euro is expected to decline. Then if the dollar would rise, and I think the dollar is going to rise, because looking at all the different things that go in to make up the dollar, I think my opinion right now is that we are going to see further strengthening of the dollar, mainly because I think the economic woes, I think everything that goes into it has made this dollar play the play around the globe, and so I think that's what you're looking at right now. I think you're going to see the euro decline. You can play you can play the options based on the U.S. dollar move, and and through either the call or the put. Now again, think in terms of the dollar. If we think the dollar is going to rise, the question I would ask is, what would you buy? If you thought the dollar was going to rise, you'd buy a call. Okay, and that's the way it works. If you thought the dollar was going to decline, you'd buy a put. That's simple. Okay, and that's what I love about this ISE position. After you think about it, is how simple it is to put what you think into play. All right, and what I want to do is, I think this is a wonderful week to have this. I just want to take my hat off to the people from ISE scheduling this week, because it ties into everything else that DTI is doing this week, which is our Wednesday on the Web, which is tomorrow. And if you would like an invitation to that, you need to click on that www.dtitrader.com, and that will click into Trading Room Access. We'll get you signed up and give you an invitation and a cheat sheet for tomorrow's trading, which I think once you've been there one time, you'll see what we're talking about putting live interactive trading into a marketplace. Again, our phone number is 800-745-7444, and just email, instead of emailing DTI at DTI Trader, send Silas at DTI Trader an email, and he'll follow up with you and make sure you got all the correct information. Again, I want to thank the people from ISE for having me here today, and I just want to pause for 1 second and make sure that I covered everything I wanted to cover. But again, Silas at DTItrader.com to get an event to Friday morning at 6 a.m. 1 second, please. Yeah. Okay, yeah, what they were doing, they got a link built. All you got to do is click this link, and we'll type it in there, and you can be signed up for Wednesday on the Web, and it's totally free.
Tom, do you want to answer some questions?
Sure. I'd love to answer some questions, and if like I say, if matter of fact, you can help me if they post something I don't know.
That's fine. The first one I definitely can't help you with is Bo wants to know why you think the dollar will rise. I think you elaborated on it a little bit, but would you just mind going through it again, playing out the next, 3 months or whatever your time horizon is?
Sure, and let me just give a little background. I've been trading the dollar for about, I guess, going on about 20-something years, and interesting with the dollar is that you sort of get you get a feel for what I would call the flow of cash around the globe, and I really feel that I was as bearish as you'd want to be. I think I gave one of these seminars at the first of the year, and I was really bearish on the dollar, and I was absolutely 100% correct on that. And the reason I was correct, yeah, and the reason I was correct is because of this same reason I'm about to give, because I think I'm right about this. I think what happened is that money was flowing out of the United States, going everywhere. And because of that general outflow, I felt like the dollar would deteriorate, and it sure did. About March of April of this year, and if you'd been in Toronto, somebody had asked me the earliest time I thought we'd see some bottoming. I thought it would be the summer, and of course we did. And then all of a sudden we had the financial turmoil. I started watching the dollar react, and I said the dollar is going counter trend to what people think it's going to do, which it was not confirming what everyone had thought it would do. They were expecting new lows. They thought it was going to go lower. So it showed strength in the fact that our market was crumbling, which was sort of an aberration for most people. For me, as a tape reader and watching the dollar, it was a warning sign that the dollar had changed cycles. And now, if you go back to the numbers and you look at where we were, and this is simple questions, but the listeners ought to go check this out. Go check the U.S. dollar at the start of July. Check it at the start of August. Check it at the start of September, start of October, start of November. Connect the dots. You will see the dollar getting stronger, and you will see the euro getting weaker over that same connection of those dots. And those dots right now are not going to be reversed, because that was a major turn from a weak dollar to a stronger dollar. So we're in the cycle now that the dollar is going to get stronger, and usually that cycle, as far as I'm concerned, lasts anywhere from 12 to 18 months as it cycles from its low to high.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.